But Dr. Gaines, thank you for coming here. So we asked you to come visit with us because you happen to be a pretty important guy. You're the chief economist at Texas A&M's Real Estate Center. Before all this stuff there, you were just one of those guys. But now, man, people want to ask you questions, don't they?
Well, yeah, asking the question is one thing. Getting an answer is another.
That is true. Yeah, I'm going to ask you a lot of questions looking for definitive answers, and I know that's going to be tough to do. So for those kind of listening in, we got to be gracious because so much of this stuff is looking into the future, and the further we look, the hazier it gets, right?
Right.
So we do the best we can. I guess my first question is, this pandemic, this COVID-19, all the ways it's dislocating our economy and even the global economy, do we have anything to compare this to?
Not really. Not really, because it was so quick and so sudden. That's one thing. For example, a lot of people want to compare it to the Great Depression, and none of us were alive during that time period. So that's number one. We don't have much memory of it, but I can tell you from history that although everybody ascribes it to the stock market collapse in October of 1929, it really didn't happen that quickly. It took a couple of years, a year, for the depression to really kind of seep into the economy and really become prevalent. The 08-09 Great Recession, which now most of us do have a fairly good memory of, it also, it happened fairly quickly, but relatively speaking, nothing like this. This was within a matter of about 2 or 3 weeks. And then almost literally overnight, a mandate to shut down, for everybody to stay home, shelter in place, that kind of thing. That hadn't happened before. And really what we have and what we're right in the middle of is virtually a government mandated recession. And governments don't generally want to mandate recessions because it's political suicide, among other things, but it's not good business. But you don't have any choice when it's a health issue and people are dying. So we have this mandatory shutdown. One of the things that, and I'm probably like most of the people listening in, I'm watching the various news channels every night trying to catch up and who's saying what and so on. In fact, after a while, you have to turn it off. You get depressed. There's no clear, we don't know exactly how long this is going to last. And I know that's what you're asking me and looking for. And I don't know, I don't have any better answer than you do. Yeah. I was listening to it here earlier this afternoon. And I know the politicians are trying to make it sound like, well, maybe we're seeing a light at the end of the tunnel. Maybe we're seeing the curve flatten. Right. Maybe we're seeing this. Maybe we're seeing that. Man, I'm going to tell you, even if they could figure out tomorrow that the worst of this is all over, it still is going to probably mandate the continuation of more or less the shutdown for another several weeks. And then my best guess is that when they do decide to open it up, they're not going to just turn the spigots on full blast. It'll be a stage-wise, stepped up. How they're going to figure that out, I don't know. It's whether people have proven to be negative, tested, or so on and so forth. I saw a chart earlier today about the 1918 Spanish flu. Epidemic that hit the U.S. And again, that's something none of us actually have any memory of, but we know about it. And what happened was it had a peak. It went down almost to zero, talking about the flattening of the curves. Right. But then it had a little bounce back. Nothing like the peak, but it bounced back on a short period of time and came back. And I know that's what they're real scared of. That if they open up the economy and tell us all we can now shake hands or do whatever, that it'll create another little spike or another wave of it. So my guess is we're at I don't know, another month or two.
So do you think it's an interesting point you bring up? We want to see a nice smooth curve that gets flattened out. but it's probably more like a basketball bouncing, where it's going to do this kind of thing for a while. What does that do? Any idea what that does to consumer confidence or business investment, as we have that fear that, oh, it's happening again when we start to see those numbers rise?
I don't know if we're going to get a lot of bounces, but the scare is that we get at least one or maybe two bounces. And then, of course, the scare is it comes back again next flu season. That's our whole matter. So what we're really looking at, and in fact, I was just working on some material just before we got on the phone here. There's going to be short-term, moderate-term, medium-term, and long-term. Long-term, I think we're okay. I don't know exactly how long-term is, but everything I'm looking at, everything I'm reading is that the expectations are that by the end of the calendar year, this is pretty much resolved. And hopefully by then there's a vaccine, which they keep talking about. And so going into 2021, we go back to quote unquote, more or less business as usual. Mm-hmm. Be in the best case scenario, long-term. Mm-hmm. Medium, what's going to happen third and fourth quarter of this year? Second quarter, in other words, where we are right now, the short term, April, May, and June, we're pretty sure this is going to be a really, really tough quarter in the general economy. Mm-hmm. It'll be interesting to see in the housing market and in the commercial real estate markets just how this is going to work out. Excuse me. But I think that we will see some fairly major slowdown. It haven't shown up yet. I'll get to some statistics for you here in a minute.
Yeah.
But the short term, this quarter, this second quarter of the year, everything I'm reading and everything I'm hearing and all the people I'm talking to, the expectations are just a general statement. Just consider the economy is going to decline somewhere between about 15 to 40%. And wow. You can read depending on who you want to talk to, and that's GDP and that's everything else. But just think about it. I mean, all of the pictures you see on your screen every night on TV, there's nobody going out and buying anything at the stores. Now they're buying from Amazon. They're still buying groceries. Not much gasoline being bought. And of course, here in Texas, we were getting hit with the double whammy of the oil price decline.
Well, I was going to ask about that too, because we have, I was reading some of your stuff from just a year or so ago at $70 oil, and showing how strong our oil was in Texas and new rigs and all that. And here we are now at, I don't even know where we're at today, but I don't want to look at it.
Yeah, mid to high 20s. It's interesting. Of course, all of that started when the Russians and Saudi Arabia decided to have a price war and raise production and so forth. And about 2 or 3 weeks later is when the pandemic really started and is now almost rendered them to some extent irrelevant in the sense that the oil price was going to decline because of the global depression or recession. The demand for oil has fallen so much that it didn't matter. We were already overproducing before they increased production.
Yeah, if you're going to be a bully at school, starting on the last day is not a good timing.
Yeah, exactly. So, and we had done all of our forecasts when we entered the year at $50, not 70. I got to correct you on that one.
That was a couple of years ago. That was a few years ago.
We had been using 50 in our econometric models. And so we had predicted, but we like everyone, we're still predicting this year to be a very good year. And indeed, I'm going to tell you, if we get into it, the first quarter of this year has looked pretty good. January, February, March, because it wasn't until the second half of March that really all of the real negative impact started hitting. In fact, we just released the March real estate data to all of the multiple listing services around the state just this morning. Mm-hmm. So I happen to have here with a little bit about it, but just as general things. But anyway, so we've got second quarter is going to be kind of tough. We're all going to be probably still sheltering in place or limited activity, limited visibility. I think the home market is going to, the sales, the activity, the transactions are going to fall off a good bit. The title companies are trying to figure out how to do remote closings.
Yep.
And I don't know if you guys have had experience with that yet or not.
Yeah, we've had a couple with that, and they're getting creative,
it's coming. They're still working out the kinks, is what I understand. And quite frankly, looking ahead, maybe the future of the real estate market, not just next year, but over the next 5 years, we may see more and more people get used to the remote closing and say, why do I need to have to go into the title company and sign papers, and especially the pile of papers they give me, which I don't read anyway. So it could well happen that we're going to probably see some structural changes in the market. More, for example, I don't know how you guys are doing it. In fact, I was going to ask you, are you doing more virtual open houses, virtual tours,
yeah,
that kind of thing,
yeah,
with to be in person?
Yeah, absolutely. It's a couple pieces of it. There's the good citizen part of it, which is I think it's irresponsible morally to only make your home and your listing accessible in person in a situation like that. It's a disservice to the buyers, to the sellers, to anyone coming in and out of the house. So I think we really have a moral responsibility, at the least, to get our cell phones out and walk through that thing with a video. Very least, and do that easily.
Right.
And it's really part of, again, I think that fiduciary responsibility that we hold dear as the realtor. We're not serving our sellers well at all if we're denying them a scared buyer, a buyer who's concerned about their health. I need to shell out the cash for a Matterport or for a virtual tour or something to allow them to have the most eyeballs possible to make sure that we find a buyer for their property.
Yeah. And I'm sure that buyers are hesitant to want to walk into a house, anybody's house, and sellers are hesitant to want to have strangers coming into the house. So it's a little tough situation. And I just think it's been so quickly thrust on us that nobody's really worked out all of the kinks, if you will, of figuring out the absolute best way to handle all that.
One of the things I think is fascinating, and of course, you're a student of history, you have to be in your discipline. I'm listening to an audiobook today, a diary from a guy during the Depression who kept detailed notes on economic ups and downs and things from the everyman's perspective. And he was amazed in 1932, years into this thing, how everybody was peacefully standing in line at banks, waiting their turns, waiting in line at soup kitchens, things like that. It amazed him. And I think it's one of those unique characteristics of our American culture is we tend to cooperate pretty well with one another. As independent as we are, we do tend to want to work it out. And I'm seeing that in our transactions. Even today, we had one we need to do some further inspection on. And normally you get some haggling back and forth with the listing agent and we kind of negotiate. But everyone is understanding, yes, we need to extend the option a couple days. So we see a lot of cooperation as far as that goes.
Yeah, people are pretty resilient, and Texans are pretty nice people.
Yeah.
So we we'll, and everybody's in the same boat. Everybody understands what the issues are, what the pressures are, and are making allowances and giving and taking, where they need to try and smooth things out. In the real estate world, one of the things we've been trying to follow, or at least I have, it's not only the brokerage activity that goes on to get buyers and sellers together, because it's still going on. People still want to buy homes. People still need to sell their homes, although maybe the time pressure is a little bit off. We're beginning to hear anecdotally people maybe taking their homes off of the listing, delisting it inactive for a month or two until the market smooths back out, for fear, just because of all the going on. And they go anywhere. if they're supposed to be sheltering in place, where you don't want to find yourself homeless if you sell it where you go, because then you're going somewhere else. So those things will work themselves out, and that's that short term. That's that second quarter of this year, the next month or two or three. Those are going to be disruptions, and for individuals, for some individuals, it's going to be significant. It's going to be very important. For the market overall, we're going to see some really horrendous statistics. We're going to see sales percent of increase of this or percent of change in that go down. GDP, you're going to see it drop in the second quarter, probably 20, 25%, 30%.
Wow.
For the quarter over quarter, maybe even more. I've seen as much, one estimate as high as 50%. I mean, these are unheard of numbers. These are unheard of numbers. We saw already that we've had nationally over 10 million people file for unemployment insurance just in 2-week period.
Yeah.
And in Texas, that number was pretty close to about 450,000.
Could you put that in some historical context for folks? I don't know if people fully understand what 10 million in 2 weeks looks like.
What does 10 million in 2? I can tell. If you could see a graph of it, it's like it's just a straight vertical line that dwarfs anything in the past, even from the Depression era, and even anything from 2008 and 9 when so many jobs were lost. It was just incredible, and we probably are in for about 2 more weeks of that for the unemployment change. Maybe not quite that volume, but we're going to see some pretty high ones before it, and then it'll even out. The government is going to try and give help to both businesses to try to keep people employed. If you go on unemployment, to get supplement benefits from the government. Those things are going to affect eventually the numbers, but we won't see that. We won't see it for another several weeks statistically.
Yeah.
What's likely to happen?
Do you think, I'm just a layman at this stuff, but I am a fan of the dismal science. As we look at this, is the hallmark of this experience going to be the instantaneous nature? We've lost millions of jobs in past cycles, but not in 3 weeks. Just the abrupt hitting of a wall.
Yep.
So what's your best sense, if we had to look into the crystal ball, and this is the part where I'm asking for the utter sheer speculation, which all good academics love. Let's imagine that we solved the health crisis fairly quickly. That's resolved. That's no longer a concern, or is less of a concern. It's manageable. How long does it take for an economy to begin to add jobs back, to be able to see reinvestment, to see consumer confidence rise again? How long does it take to see something like that happen?
Well, you just asked the $64 question. There are two $64. How deep does it go? And then how quickly and how long does it last?
I'm not against insider trading on this stuff, so I will ask.
Yeah, I know. And the answer is, I don't have a clue. Well, your guess is as good as mine. The unemployment is going to be fairly significant because we've had this mandated shutdown. On the other hand, it's also pointed out that so many people do have jobs that they can do from home. You're still working. I'm still working. I mean, we're doing it here on our computer through the internet. Most of the people that have been so affected are hourly workers who have the kinds of jobs they have to do in person. Mm-hmm. Reading a report this morning, the plumbers, the electricians, the heating and air conditioning repair guys, the people who have to come to your house to be able to do the services. Ironically, the employment numbers, the healthcare has actually had a slight negative, mainly because so many of the doctors and healthcare providers, they have to do these services in person, and they are not necessarily on the front line against the coronavirus. So you've got dentists and doctors and so forth, and then people have been told not to do any kind of elective So all of a sudden, the healthcare total employment has actually shown a slight decline, or
That's
not as much
interesting.
increase as you'd want. Actually, decline. So there's these hidden factors going on in here. How long it'll last? My basic comment to everybody is this: the key is going to be jobs and job recovery. And you've asked the right question. How quickly will the jobs and job recovery take to get back online? Business investment, you mentioned that in your statement, in your question. Business investment is going to be, it's probably going to stay down for the rest of this year. Businesses are going to be, they're not going to know their finances, despite the fact interest rates are so attractive. And incidentally, in the housing market, interest rates are still attractive. They're not as low as you think they might be, but they're very attractive. At 3.3% is a good attractive interest rate for buying a house.
Yeah.
Theoretically, in financial circles, the mortgage interest rate right now, theoretically, ought to be less than 3%. It probably ought to be in about 2.8% range. If you look at the differential, the spread to the 10-year to the 30-year fixed mortgage rate, historically, you said I was a historian. But that relationship isn't holding up right now, mainly because our mortgage lending community, the banks, the mortgage companies, et cetera, literally can't handle the volume of the applications for refi, for purchase, and it's getting in the way now for all of the Small Business Administration loans and so forth that banks are asked to process. So just the sheer volume of it, so they've got no incentive to lower their rates. In fact, some of them, we've had 3 of them tell us, I purposely haven't lowered my rates because I don't want any more new business.
So, and that's fascinating. You mentioned some of these hidden factors that go into it of the decrease in employment and the medical sector. Makes sense if you're in medical billing or coding, or you're a receptionist and you're at a plastic surgeon. You're not seeing as much business right now.
You're out of work.
Yeah, you're staying at home like everybody else. And on the finance side, they may have had a surge in demand from low interest rates normally, but they also have staffing problems with people working remotely, and they're working less efficiently than they could be if they're all in their offices with their machines and all the other stuff. So there's just, it kind of gets me to one of those things that I've seen that I think we should be reminded of is we have to be patient with each other right now, because everyone is figuring it out, and all of our service is going to degrade a little bit right now if we figure out how to do this.
Yeah, you're exactly right, but it gets back to your key question, and I think the key point of the whole thing is that once we more or less open the valve and tell people to go back to work, and that the sheltering in place, or at least in some sectors or some areas, maybe it's going to be geographical areas, I don't know. But how quickly we can recover those jobs, get people back into productivity, get them back on the payrolls and so forth. To me, that's going to be the critical issue. And that's also the answer. I've been asked the question I'm going to anticipate you asking. And that is, are we going to expect to see a wave of foreclosures? Because some people may not wind up going back to work.
Mm-hmm.
And if you think back, you and I, we went through the 2008, 9, 10 period of time, and particularly here in Texas, and even around the country to some extent. It wasn't so much all of the funny money, the subprime lending and so forth, that contributed to it. But what really created the nearly 12 million homes that went into foreclosure between 2008, 9, and 10 was people losing their jobs.
Right.
Their life event changes generally create the foreclosures. It's not generally the type of financing. It's not the interest rate. It's a life event. The number one cause of foreclosure, lose your job.
Yeah. And it seems like you get stuck there when some stuff I've looked at coming out of the real estate center there, we have a different equity situation right now than we had going into the Great Recession. where then if I was upside down at that point.
Grant, I lost you. I lost you.
Oh,
I lost you for a second. Start over.
okay, I'll start over. So one of the things that I'm curious about with a foreclosure, of course, the job, if I don't have a job, I can't pay my note no matter
Right.
what. But it doesn't mean I have to leave the thing. I could sell it if I had equity in the home, and I could walk away and begin renting. People couldn't do that in general during the Great Recession, but it seems like right now they may have had enough margin created from the growth we've had the last few years. And I'm curious about how things like a shortage in housing supply, how that kind of stuff factors in to insulate us some from the collapse that we saw in the Great Recession.
Yeah, we in fact, Texas, as you know, we weathered the Great Recession much better than most other states, or at least a lot of the other states that happened, for a number of reasons. A couple of ones that you just mentioned. We had more equity. Statistically, more people in Texas had greater equity in their home. Number two, when we did legalize the second mortgage on a home, 2005, we put the 80% limit there. That was a big deal. We didn't know it. I don't know. We were probably more lucky than smart, but nevertheless, it turned out to be a very good thing because it kept us collectively as a group of homeowners in the state from getting terrifically over leveraged. Now, we still had foreclosures because we had a state where home values went down, and irrespective, you wound up upside down or on your loan. And we had some foreclosures, but we came through reasonably well, and we had job formations and job recreations, if you will, fairly quickly relative to the rest of the country. At one point there, we were creating 1 out of every 5 jobs in the United States were being created in Texas. So
God bless Texas.
Yeah, God bless. No, God bless fracturing, hydraulic fracturing.
Back to the oil, right?
That was the stimulus. I mean, that was the driver that created it. That created the emphasis, the oomph. That's a technical economics term.
I was going to say, I don't think my professors would have accepted it, but
yeah, but it created the oomph for the whole economy for the state. We aren't going to have that this time. In fact, just the opposite right now. But Texas is still poised to do well. If we can get our jobs, if we can get it going back up, we'll do okay. The other part in the real estate business, though, I was going to even ask you, one of the things I've been trying to keep track of is not only the brokerage, just buyers and sellers getting them together, but even if they get a meeting of the minds and want to have a contract, how do you get the properties inspected and appraised?
Yeah, great questions. It is increasingly challenging. There are some inspectors that we work with who will do new builds only right now. Others who will only do vacant properties. Those that are still going into homes require, both for photographers, for appraisers, for inspectors, all kind of the same basket. They require that the home be empty by the time they arrive. Everyone's gone. They want all the lights on, all doors unlocked, things like that, so they can walk in and be as minimally invasive as possible. And, of course, you've seen, Fannie and Freddie accepting drive-by appraisals, stuff like that. There are solutions that I'm sure there will be some negatives, like every medicine has some side effect to it. I'm sure there'll be some consequences we'll sort out in the months ahead. But again, it's just one of the things that kind of amazes me, and that gives me hope for those who think that the shedding of jobs and of economic activity is perpetual. We know from history it's not. There's a point when stuff slows and hits the bottom. The hope is everyone is trying to cooperate. They're trying to order from DoorDash. They're trying to support the local business. They want to engage in activity the best they can. They just don't want to get their neighbors sick. And it seems to be really sensible. And in some ways, I feel, I don't know if it's uniquely American, but there's a part of what makes humans special that you can see at work right there.
Yep. Yeah. And it's just one of those things. We'll work it out. It's any kind of change that's sort of foisted on you because of this kind of impact. It just takes a while to figure out, okay, this works, this doesn't work. We can do this, we can do it that way. It's just like the remote closings we were talking about.
Yep.
And so on. We'll iron it out. In fact, my guess is about the time we iron it out and really make it work, the panic and the thing may be over.
Yep.
And we can kind of go back to quote unquote normal. At least you're not as worried about it. The other part, though, and the other question I was anticipating on the standpoint of the appraisers, not only just physically inspecting the property, but what kind of value adjustments are being made. Because I have not seen price enough data yet to tell you whether or not there has been any price movement yet.
Yeah.
That I could say definitively, and I don't know exactly what it's going to look like a month or two from now.
Yeah, I think that's right. From what we've seen right now, we're fortunate we have had several transactions in the pipeline closing in the next few weeks. Those are unaffected. Of course, they're all looking back at historical data, so history is our aid at this point. I think what we're going to see is, and this will be interesting to see how appraisers factor this in, there will be more outliers, I think, where somebody was concerned and liquidated their property because they got an offer that they really wanted that certainty, so they took it. And some of those, I think, are going to drag down values a little bit unless appraisers find a way to measure someone who essentially did a fire sale.
Yeah, and that's where the appraiser is going to have to, really do a little bit of a job of what were the terms of sale, what were the conditions of the sale. Was the seller really, the willing buyer, willing seller, or was the seller under some pressure for whatever reason to have to accept a low price because they had to sell, or a buyer for whatever reason had to buy. For example, if they've moved in here from another state, they've got to reinvest their funds from the home they sold from wherever they left, and they're up against the time limit. They may have to buy whatever.
Absolutely.
I haven't seen or heard of a universal adjustment factor, and of course, whatever happens, the lenders are going to blame the appraisers for it.
Well, I'll blame them too. Put me in there. Well, so I want to be mindful of your time. I could talk to you all day long, and maybe we'll have to do this again sometime if you've had fun with it. But I got a couple more quick questions, if you'll indulge me.
Sure.
A couple that other folks have asked, and I wanted to ask on their behalf. First, we really honed in on residential real estate, and that affects most people. Most people are aware of that. But commercially, we're going to see some lease problems. We're going to see some retail problems, restaurants problems. What do you see happening with commercial real estate?
Yeah, that perhaps is more problematic right now. It's a domino effect. For example, think of a retail center, not a mall, but just the strip center that has 6, 7, 8 tenants in it. The drug store, the dry goods store, the convenience store, and then a laundry and a haircut and the nail salon. You know what I'm talking about.
Yep.
And now most of those are dark, or even the ones that have kept the lights on. Nobody's in there buying anything anyway. Mm-hmm. That's going to be a problem. I'm getting reports back of some tenants, in fact, some large tenants, national tenants, have already told their landlords they're not going to pay their rent for the next 3 months. It's going to create some issues here, and office space. My guess is, on a go-forward basis, a lot of companies are looking around now, at especially if this goes on for another, say, month or so, and they're looking at they're looking at the productivity. Has my productivity declined such that I really do need to get all these people back physically into the space, or hey, maybe I don't need as much space as what I thought I needed, and do more conferencing, more remote work. That kind of thing. Industrial warehouse, what we're hearing and seeing is that actually is picking up a little bit, because the Amazons of the world and the Walmarts are still having to bring in a lot of stuff, store it, and then logistics distribution. So that part of the commercial real estate is up. So the office market is going to be affected. By and large, office leases, even if you don't have your employees there, you pay your rent. The problem is so many of those tenants are also almost month to month, it's like a family living paycheck to paycheck.
Right.
Some of the businesses run month to month. They run month to month on lines of credit from a bank to cover their operating expense of receivables and receipts from whatever their business might be. So it'll be a matter of how many of those can do. The retailers are going to make a change. This is probably going to impact a lot of the regional malls, which were already in trouble. The big box users, which were also wavering a little bit here the last year or two.
The Sears and Pennies and
what their abilities are. Yeah. So it's going to be very, very interesting on the commercial. On the only positive thing, now that I've totally given it a negative,
everyone's
spin,
depressed now.
I will give it one positive. I'll try and give it a positive spin, and that is, look at what happens to the stock market. We've got a lot of investment dollars that are going to be looking for yield, going to be looking for rate of return. In a period of low interest rates, cap rates are likely to come down. And generally in periods like this, fixed assets become good investments. So my guess is you're going to see an initial decline, but then a pickup in the investment market coming in. The apartments probably won't be hurt nearly as much as maybe the office and the retail.
Yeah, interesting. Yeah, it's one of those, I'm sure if you could construct the model to calculate exactly which dominoes fall in what order, you'd be talking to me from your boat somewhere.
Yeah, I'd be from Zurn, Switzerland or someplace. In fact, we wouldn't be having this conversation.
Right. And that's, again, one of those things that I think is hard for people to get is our government officials, our business leaders, they don't know. There's just way too much data to compute on these things. So we do the best we can, but you kind of have to watch it develop to know what's going to happen next.
Yeah, and as you pointed out early on at the beginning, it all hits so hard so fast, and we haven't experienced this before, and people generally make bigger problems on something they haven't had before. If you've sprained your ankle as a kid and you sprain it today, okay, I've been there before. I've had this. I know what it is, and I know how long it's going to last, and it'll hurt for a while, and I'll wrap it up and put some ice on it, but then it'll be okay. We haven't had this injury before. This is an injury, so we're not real sure how to deal with it yet.
So, okay, let me fire off a couple quick ones at you,
Sure.
and then I'll turn you loose. Again, I really appreciate you staying overtime with us and visiting with this. Fantastic stuff. I've loved it. So one question somebody had was, how could this possibly affect landlords? When we think about the domino effect of tenants maybe struggling to make payments on time, specifically on the residential side, do you think we're going to see landlords struggle with leveraged properties? Are we going to see larger institutional investors snatch up more of those? What's going to happen on that side of things?
Multiple answers there. The domino, of course, is if the tenant doesn't pay the landlord can't pay the lender because he's probably got leverage. He's got a mortgage of some sort. He's got a loan of some sort. He also does not have resources to maintain the property, doesn't have resources to upgrade, make capital repairs, other kinds of issues that come in. Perhaps can't even pay his taxes, which is going to be another issue. So the dominoes there's several dominoes that sometimes you don't think about all of them that way. By and large, part of the relief effort from the government is to try and help people who need help, at least commercial. On the commercial side, businesses, because part of the relief is not only to keep people on the payroll, but you can use it for your mortgage or your rent payment and so forth. If you're somebody who owns 3 or 4 houses or a couple of 3 small apartment buildings or something like that, you're pretty dependent on those tenants. And if you've only got 5 tenants and 2 of them don't pay, well, that's 40% reduction in your rent income. And my guess is that could really pose a problem unless you've got other resources or don't have that much leverage on the properties in the first place. Yeah. So that is going to be an issue. Now, I grant you that there is supposedly some forbearance going on, but most of the forbearance is for primary residents. I'm not aware that there's that much effort to do forbearance on investment and income properties.
Yeah.
The lenders may not have much choice in the matter.
Well, I was going to say that's in my layman's study of things. It seems like that was part of one of those awakenings in 1932, 33 is if we foreclose on everybody, that doesn't help us.
No, what am I going to do with it? If I foreclose on it, what am I going to do with it?
Yeah.
I can't rent it for any more or get the tenants to pay me any better than you could. And I can't find anybody to buy it, at least at a price that I want.
So practically speaking, the advice that we're giving our clients and trying to help them through is, and again, I think it's part of being a good moral citizen, is have a conversation with your tenants. If you're a landlord,
oh yeah,
keep the line of communication up with them, either on the commercial or the residential side. And
right.
if they're struggling, take a partial payment if you need to. Stack it on
Yes.
the end, spread it out, whatever, or forgive it. But something is going to be better than nothing, and it will keep the domino tottering instead of falling over.
Instead of complete, yeah, you're exactly correct. And several landlord reps I've talked to are saying exactly the same thing to their clients. A, communicate, and B, if you can do something, make a part payment, whatever. And then third, yeah, you'll have to work out what you're going to do on the other end.
Yeah.
If you forgive 2 months of rent, do you just add the 2 months to the term of the lease?
Yeah, good questions. Okay, here's my last one for you that I will ask you now. I've got a list of a whole bunch more that I'm not even going to get to right now. Where do you see the greatest opportunity? If we can look beyond the crisis right now, if you're someone who's been saving some capital, you want to do something, whether you're buying your own home or you're an investor or something, where do you see opportunity now, and where do you think it's going to be in the next few weeks and months?
Well, in the next few months, I wouldn't be surprised if we don't have some distressed properties come on the market, because it is inevitable that some of the landlords we were just talking about and property owners probably are going to be under pressure and may not be able to survive. It's too bad. To the individuals, it's a really tough thing, but from a total market perspective, I think that could happen. And we've talked about the commercial, the investment, buying houses and renting them, buying them and flipping them. There'll probably be some opportunities there. Land values may go down, vacant land, because it doesn't generate income. It's an illiquid asset anyway. So we've already seeing that in some of the rural communities. The rural land values are going down. And those may provide some real opportunities. We already know that, for example, most of the large institutional iBuyers, the Redfins, the Zillows, and so forth, have basically cut back. Mm-hmm. They've shut down pretty much. First of all, their algorithms don't know how to price the properties anymore. And also, they were very highly leveraged. A lot of them were working on a lot of venture capital, debt capital for that matter, and they were not able to generate the kind of business model that good times provide. Their models don't provide for a downturn in a wave, a cycle. And we're going to be most definitely in a wave or in a cycle. I just don't know how deep and I don't know how long, but we're going to be in one. But that provides opportunities. And for brokers, that's opportunity.
Yeah.
Because there'll be market activity.
Yeah. The one of the things we've talked with some of the agents around here is a cycle like this can be an accelerant into the future. If we really lean into it, it of course produces tremendous trauma. So we don't celebrate it in the moment, but it produces pretty innovative solutions to those who attack it as an opportunity and find ways to thrive. They tend to emerge healthier. Maybe they are less leveraged on the other side. They have new techniques, but there's going to be some opportunity, I think, for people long-term when we get through this as business people, and then just in their personal lives. There'll be new products, new businesses that emerge from this somehow.
Oh yeah, absolutely. No doubt about it. I don't know exactly what those are going to be or where, but they'll be there.
Well, if you think of a great idea, you let me know and we'll work on it together. And
You'll be the second one to know.
I'll make you a 50-50 partner. Um, Dr. Gaines, I really, really appreciate it. I don't want to take more of your time. You've given so much. I would love to talk more with you at some time if you're ever up for it. I'd love to visit with you. Really appreciate it. Is there anything that we can do for you?
No, I appreciate it because I was looking forward to this because I was as interested to hear what you were going to say as what I was going to say because you're on. I don't do this. I'm not on the front line on a day-to-day basis. I see numbers and try to think about it and analyze it, but you're on the front line. So it's very informative to me, or just as informative to me, to talk to you and hear what you are doing and what your agents are doing and what you're seeing in the market as it is for me to try to pontificate here.
Well, I appreciate that, and that's part of our goal. Is we want to get different people out there because there's wisdom when we diversify our view a little bit and we get other perspectives in there. So I really appreciate
good luck to everybody.
Yeah, you take care.
Take care of yourself. Thank you.